What's good? Here's Wade. In this video I will be explaining last week price action. First of all, we start from economic calendar in order to track volatility. Last week we had a lot of high impact news events for US dollar and also GBPUSD. So on Tuesday we had the core PPI for US dollar, and also we had the CPI for GBP and also CPI for dollar, high impact news events that easily can drive the price to the draw on liquidity. On Thursday we had the core retail sales for dollar, retail sales, unemployment claims, and finally on Friday we had the retail sales. So on these days with high impact news events, we could expect a lot of volatility coming into the market, so the price can easily reach the draw on liquidity on days that there is a high impact news events. So looking at this week, you can potentially see that this week is high probable to expand instead of being a consolidation, because we have a lot of high impact news events from Tuesday till Friday. In weeks like this, we can easily have an expansion week, so you need to be very well prepared and positioned in order to capture profits. And also you need to protect yourself because the price is unpredictable. Therefore you need to manage your risk on each individual trade that you take. With this being said, we can jump into the chart just to see the higher time frame key levels, and the whole narrative. Right here we have a GBPUSD weekly chart. You can clearly see that the price went down and retested a weekly bullish order block and also filled a weekly favor gap that we have in between these two candles. So the price showed a clean rejection right here on this week. So this week was an expansion to the upside. If you look in terms of liquidity, we have 1, 2, 3, 4 highs that hasn't been taken before, so easily the price can use these previous week's highs as a draw on liquidity. Price right now easily can reach the July high and also the previous year high right here, but we don't know when the price will do that. So I'm not here to predict where the price will go because I don't know. I just wait for the price to tell where is more likely to go, and then I try to follow. I don't have any skill to predict the price. This was a nice bounce. That's why for the whole week my buyers were bullish, because on the higher time frame, this is a weekly time frame, we were retesting a good PDR raise, which is a bullish order block that we have right here, and also we have a weekly favor gap that got filled and the price didn't close inside of this key level. We had a clean rejection from this key level. So this week we got the big expansion. So remember, the economic calendar was supporting the idea that this week could potentially be an expansion week. So as you can see, likely this was a expansion week to the upside. So the upside bias come from the higher time frame key levels that we see right here, the bullish weekly order block and also the bullish weekly favor gap that got filled, and we got a rejection. So this week we expanded to the upside towards previous week highs that we have right here, 1, 2, 3, and the July high sitting at this price point also can potentially be a draw on liquidity on the next weeks. On the daily time frame, you can clearly see that we got the opening right here. This was the opening of the week. So we had the Monday range, then the price expanding higher to reach this low resistance liquidity run, and also we had these equal highs, literally equal highs, so the price draw over there. But before we go into this week price action, the last week price action was more important in terms of providing buyers for this week, because this week was a continuation of last week price action. As you can see, the previous week before last week we had the price retesting the daily bullish order block right here, and also we got the daily rate within. At the same time, we feel the inefficiency between these two candles, so the inefficiency got filled over there. That's why we have day one favor gap fill right here. So the price then rejected. We got a clean rejection to the upside. So when the week started, my bias was already bullish. I was just interested in buying GBPUSD. With that bias already defined, and also having the economic calendar saying that a lot of volatility will be into the market, I just zoom in these high time frame key levels into a hourly key level. So this is a 1 hour time frame that we have. So I said that this was a continuation of a previous week price action. During this week we had a daily rate, a change in the state of delivery. I tried to buy, but my limits didn't get triggered, so I just left it like this. But on Friday you can clearly see that the price went down and retested this H4 favor gap. If you can go to H4 time frame, you're going to see that we have a gap between these two candles. So this is a H4 favor gap. When I can go down to 1 hour time frame, it will look like this. And also within this H4 favor gap, we had the H1 favor gap. So the price went down, feel it a little bit, the H4, while at the same time was retesting the H1 favor gap, and we had a clear rejection from there. All I wanted to see on Monday, all I wanted to see is a change in the state of delivery in order to buy, expecting the price to go higher. As you can see, we had a lot of low resistance liquidity run in form of failure swing. So we had these 1, 2, 3 highs, and also we have literally equal highs right here. And also there were equal highs sitting at this price point also that could potentially be used as a drawn liquidity. My bias were bullish, and also my higher time frame were showing me that the price can go higher, and also the economic calendar was saying that there will be a lot of volatility, so I was well positioned for the week. On Monday, when the price closed above these down candles, they became bullish order block, where I bought right here expecting the price to reach higher prices. When I bought from here, I had high expectations of the price reach these high time frame key levels right here, because these all for me was a low resistance liquidity run, and the price could easily run through these all highs. That's why when I bought from this price level right here, I had my stops right here. I had expectation from the price to reach at least this high right there. So this was a 6.67 risk to reward trade. I got in on Monday. I let it run. On Tuesday, as my buyers were already bullish, I could potentially look for continuation trades. On Tuesday, I had a trade because of this down candle. When the price closed above right there, I decided that I could buy expecting higher prices. So I bought in this little retracement that you see right here, and my first target was this equal highs right here. My target was this equal highs right here. I risked 1% on this trade, and also I was risking another 1% right here, so I had a 2% risk running into the market. But as soon as I set this trade up, I moved my initial stop to the break even for the first trade, and I just let this trade run with a stop below these lows right here. But what happened is, on Tuesday night, I saw that my risk to reward for these two trades was 5%. So I was 5% up. And on Wednesday there was a CPI for dollar and also CPI for GBPUSD. So the question that was inside of my head was, am I willing to let that 5% go away on the next day? And also you need to remember that the most prop firms are equity based, So if my equity drop below 5%, I would potentially lose my accounts. I decided to close the initial position at this price right here. So the first trade got closed at 3.3 risk to reward, and then I left the second trade running. So on the next day, I got this trade running. So the CPI came out for GBP and the price dropped, and then we recovered a little bit. So when the price recovered right here, my expectation were very high that the price could potentially continue going higher. And also I saw that the euro dollar at that time was retesting a daily bearish favorite gap. I was kind of skeptical that the price could potentially go higher, so I decided to cut the second trade around here. If you take this price action right here to judge my position, you are just being led by hindsight bias. When I closed my trade, the chart was like this. I couldn't know that the price could potentially go up. So my best decision at this moment was to close the trade. When you take a decision, you should not rely on the outcome of the decision to judge whether the decision were good or not. You should never base the quality of your decision based on outcomes, because most of the time you're going to take good trades that are going to be losers. Sometimes you're going to take bad trades that are going to be winners. The big difference is that when you take good trades overall, over the long term, you're going to be profitable. But if you take bad trades that don't fit your criteria, your plan, over the long term, you're going to lose money. No matter how hard you try, you're going to lose. So you need to aim to take the best trades. You need to know that the best trades can lose money, but over the long term, you are going to come ahead. That's the goal. As long as you manage the risk in order to stay the game. Don't judge your positions based on the outcome, but the process behind it is more important than the outcome. So basically, there is no hindsight behind these trades, because it's easy to look to the market from the backwards and think that you're already an expert, but there's no hindsight bias. For the last week, I updated and I told everyone that I was expecting a little bit of volatility into the market, coming to the market to expand the price to the draw. And also I shared the analysis and the GBPUSD trade. This was the GBPUSD trade that I shared before anything unfold. This was Monday. And also I shared the second position that I took, and also the confirmation that I took all these trades, and also I took it on this platform also. So no hindsight bias. If you want to learn how to trade and how to make analysis like this, I would recommend you to join my free Telegram. I'll be dropping a lot of content over there. I hope you find this video useful, and thank you.